Yeah. So we're starting with the bank reconciliation statement. So definition, right, is it's basically a statement reconciling. That is explaining the difference between the bank balance as per our books. We call it the bank book, cash book, different names, same idea, and the bank balance as per the bank statement, past, right? So this is given by the bank. This is prepared by our accounts department, by from us, right? So let's try with it, to understand this with a very simple and small example. Okay. So the basic format would be like this. Okay. So you will have the heading bank account statement as at. So this is a statement similar to the bank, sorry, to the balance sheet, which means it's prepared as at a point of time. Okay. So typically we will prepare this at the end of every month. Businesses would do it usually at the end of every month so that we have a record of a monthly basis. Some businesses, they have huge amount of transactions. They may do it weekly or even daily, depending on how big the business is, right? So let's say 2020. Okay. So first, you will start one balance. You will start with, say, balance as per cash book, right? Let's say that the balance as per cash book is 1 lakh, right? And let's say that we have to get a bunch of adjustments. And so there are a bunch of adjustments where we add numbers and we subtract numbers. And after we do so, we will arrive at the balance as per bank statement, or let's call it the passbook statement. Okay. And that would be, let's say, I'm going to call it 75,000. Okay. So as of now, what do we know? We have more money as per our books compared to the bank balance. All right. So, what would the reasons be for this? Let me try to give a reason here. Checks deposited, but not cleared. Okay. So let's say that I have received a check and I have gone ahead and deposited it in the bank. But the moment you deposit a check in the bank, it doesn't mean that right at the moment you deposit it, your bank balance will be credited with the check amount. What happens is it has to go through a process, as I explained in the previous class. It will have to. So what our bank does is our bank will take the check. It will, if it is the same bank check, then it will basically check the account of the person who is giving you the check and see whether he has a balance, see whether his sign is matching with their records, and if everything checks out, they will reduce his account balance and increase yours, right? In case it's the check from another bank, right? What they will do is they will scan it, right? So and it's called truncated check, right? And they will go ahead and send a copy of the scan to the other bank. Say I have a bank account in Citibank, and I received a check from somebody who has a bank account with Axis Bank. So my banker, Citibank, I will give it my check to him, and he will take a picture of it, and he will send it to Axis Bank. Right now, Axis Bank will receive the check. It will go through it and check whether the sign is matching with their records, whether the account holder has the corresponding balance, and if everything checks out, they will reduce the amount value of the check from their account holder's bank account, and they will transfer that money to Citibank, who in turn will deposit that money into my account. Right. So when I deposit a check, I know that my cash account is going to increase, right? Because cash is an asset. I received an increase. But the bank passbook may not reflect it yet because the bank has to go through all these processes in order to increase the value in my bank account. So as soon as I receive a check and I deposit it, I'm going to go ahead and increase my asset value. Say let's call it a check with a value of 15,000, right? But the bank may not necessarily have increased the value. So in that case, that's a reason for a difference. So how much does this explain? Let's say that I'm going to sum up all of these on the outer column. Okay. And let's say we have another column, adjusted cash book balance. That is the cash book balance after all these adjustments. So I'm supposed to, oh, this would actually go on the left side, right? Talking about other things. So here, which means that I'm supposed to less this value, right? Which means I'll get 1 lakh plus this amount minus this amount. So they become 85,000 crores, which means I still have to explain a difference of 10,000, right? So let's say that I have bank charges, right? Or rather, I have received, basically the bank has credited interest, right? But I have not recorded the interest yet, which means the bank will have an increased balance. The passbook will have an increased balance, but I will simply not have recorded that income, which means that my cash book's value would be lesser, but the bank's passbook value would be greater because they have credited the interest, right? The savings bank account interest or current bank account interest, but I would not have correspondingly recorded that, which means my bank balance will be higher. So I will have to reduce that bank balance in order to compare my cash book and my bank book, right? So what do? I have to go ahead. In this case, my cash book value is lower, so I will have to add the balance. So I'm giving you another example. Interest credited in passbook, but not counted in cash book. Let's say that's 1,000, right? So now I have explained, in fact, I've created a bigger difference, which means there are many items here that are going to be affecting how I'm making my reconciliation statement, right? So there's 15,000 worth of stuff that's to be reduced and 1,000 worth of stuff that's to be added, right? So that's 1 lakh, 1,000 minus 15,000, and that's 86,000. So let's say that I presented a check, right? Which means that, or rather, I issued a check to somebody, but they have not yet presented it to their banker, which means my cash balance would have reduced. I would have accounted for the reduction in my bank account because I have given a check. But my bank would not have received a request to clear a check, which means that my passbook will not show the amount it has reduced. So what would that be? My cash book would be lower than my passbook because I would have reduced the money from my books, but the passbook would not reflect that way because I've issued a check, which means I've given the money to somebody, or rather given the check, but they have not asked for the money from my bank yet. So this would be a case where my cash balance is lower, which means I have to add something to it, right? So what do? We go ahead and mention that type of stuff here. Checks issued, but not yet presented. So let's name that a nice 2,000 rupees. Okay. So now that's another 88,000. That's a difference, or 88,000, which means 13,000 difference. So what are the types? Let's say that my bank has debited my account with charges, which means that my bank account has asked, and there are bank charges, right? And my passbook, the balance would have reduced. Let's say I have balance of 1 lakh and they have charged 1,000 rupees. Let's say that they charged 1,000. But I would not have accounted it yet. So my balance as per cash book, my books of accounts, is not lower, it's higher. The bank statement or the passbook would have reduced in value, but my cash book will still remain the same. So I will have to reduce the amount of my cash book in order to try to match it. So bank charges not recorded in books. Right? Let's say that's another 5,000. Right? So the difference is another 8,000. What other kind of things do you think could happen? There are ideas called bills, right? Which means that if you remember the idea called bills payable and bills receivable, they are ideas of basically a bill is something like a promissory note. Let me just try to explain this to you. Don't worry about this. I don't really plan on going too deep into this as of today. So bills are promissory notes, right? So they are like checks, right? But they are issued by businesses, not banks. Which means that, say, Mr. A and Mr. B are there. So Mr. A owes Mr. B rupees 1,000. Okay. So what Mr. A does is Mr. A presents a bill, and this bill is a technical term. Okay, bill to Mr. B. So let's put it this way: Mr. A owes, right, and Mr. B has right to receive. So what does that mean? When Mr. A owes money, he has a liability, right? So what do we call this liability? We call this liability a bills payable, right? Correspondingly, Mr. B has a right to receive. So Mr. B has an asset, and we call that bill receivable. So when Mr. B is getting a bill basically represents the right to receive the money from somebody. Okay, and there are many ways in which you can use a bill. There is a concept called endorsement. There's a concept called stance recourse. There's a concept called non-negotiable. There are many ideas. Let's forget all of that. As of now, think of just two ideas. One, there are things called bills. The technical term is a promissory note. It's basically a promise to pay. Okay, that's the very idea. The very simple thing is the bill literally is a piece of paper with the words I promised to pay. It goes on. Okay, that's a very basic idea. They are like checks, except the check is something that is issued to somebody and they don't ask you for the money. They ask your bank for the money, right? And the bank will reduce it from your account. However, bills are something that are directly presented. So when Mr. B gives this bill to Mr. A, right? Mr. A should pay Mr. B 1,000 rupees. That's the basic idea behind a bill. Now, yeah, it's basically a piece of paper. Like, imagine what a check is. A check isn't something fancy, right? It's just a piece of very nice quality paper. Exactly. So, think, for example, let's say I'm making a sale, right? But I want some document that gives me the right to. So basically, it's a document that establishes the right. It's basically a document that says this guy has to pay me something. So instead of Mr. B having nothing to prove that Mr. A has to pay him the money, he will receive a piece of paper from Mr. A saying that the money is owed to him. It's just a document. So we'll understand why this document is necessary in a moment. There are multiple uses. What I'm going to say now is one of the uses is called discounting a bill with a bank. This is what we are interested in right now. So what Mr. B does is, Mr. B now has a bill, right, worth rupees 1,000. Right, what he will do is, let's say he needs the money now, but the bill says Mr. A will pay him 5 days from now or on the 15th of May. Right, what he'll do is, he has a bill, right? So this bill is worth 1,000 rupees. So what he'll do is, he'll go and give this bill to his banker, and his uh, bank will say, all right, I'll take this bill and give you rupees 900. Give you rupees 900. All right. But then you will be thinking, I paid rupees 1,000, right? So value of bill is 1,000. I received from bank, that's only 900. So what about the 100? That's something I call a discount. So why do we basically ask the bank? We can basically wait till the 15th of May and get the 1,000 rupees, right? Sometimes when you need cash today, but you're not able to get the cash today, but you have something with the value of say 1,000 rupees. You're telling the bank, okay, see, I have the right to receive this 15 days from now, but I need the money today. So I will give this to you. And as a consideration, because the bank is giving us money 15 days in advance, where it has no business doing it, I'm giving the bank something of like a commission or a consideration, right? So the bank will basically benefit from this 100 rupees. The bank is providing a service to us, right? Because the bank has no business paying us the money, but because we need it, the bank is going out of its way to take the bill and give us the 900. So if you want to get a small peek into how this is accounted, so let's get the basic idea of the transaction. What's happening? Mr. B has to receive something. So Mr. B has an asset account called the bills receivable account, right? And that will be debited with 1,000. And let's say the reason he's receiving a bill is because he's made a sale, right? So he's made a sale worth 1,000 rupees, and he's receiving a bill from the customer. So instead of debiting the customer account, he's getting a bill from the customer. So he's debiting an account called bills receivable. Right? Not all the customers need to give a bill. They may very well just pay you the money after a point. But sometimes you may insist for a bill precisely for these sort of purposes, right? So that you can discount it with the bank today. So this is the first transaction. Now, if the bank is going to pay you, right, that 100, 900, right, and your bills receivable, that is the bill you have, is no longer with you, which means the value of the asset reduces by 1,000 because you're giving up the entire bill, and the balance is a loss for you because you could have got 1,000 if you had basically given the bill on the date of maturity. But instead, you ended up giving it to your bank today, and for that, you're incurring a loss of 100. And you're calling it discount on bills. Right? This is a loss. Okay? So, let's say that on the day, on 15th May, Mr. A is not giving the money, right? He's saying so that what will happen on 15th May? 15th May, the bank will approach, let's say, I'll give you the facts here so you can refer to it later as well. Let's say receivable maturing on 15th May. Right. So on 15th May, bank gives bill, use a technical term, presents bill to Mr. A. Okay. You wouldn't know about this because the moment the bank takes the bill from you, you are out of the transaction. But Mr. A refuses. The technical term is dishonors the bill, right? So basically, you have a commitment, but you're dishonoring the commitment. That's the technical term. So what will the bank do? The bank is not an idiot. So what did the bank say to you? Look here, I asked you whether you would like 900 instead of 1,000, and you said yes. So I gave you 900 for the bill that I was supposed to get money for. But now I'm not receiving any money at all. So what will the bank do? The bank will go ahead and reduce the entire 1,000 from your account. How does that make sense? The bank only gave me 900, which means the bank can only reduce 900 from my account. But that is not the case. The bank had the right to get 1,000, right? But it is not receiving 1,000. So now what we're going to go ahead and basically we're just going to reduce our bank balance because the bank will remove it from us, right? I'm going to go ahead and credit the bank account with 1,000, and we know that, so this will be the credit, right? I'm sorry, the bank reduces. But now I have the right to receive this money from Mr. A, right? So I'm going to let's think right now. I'm going to just go ahead and debit Mr. A. And I don't want to go into too many difficult concepts right now. This is an entirely different chapter called bills of exchange, and I'm not teaching the chapter right now. I'm just giving you an idea of what a bill is, right? That's number one, and what is discounting a bill with a bank, and what is dishonoring the bill. These three ideas. So I'm saying that Mr. A now directly owes me 1,000. So I have a debtor now, and my bank balance is reduced. Okay. So the two ideas that we're going to use now is the concept of dishonoring and the concept of discounting. Okay. So let's say that the bank is basically reducing its money, right? Let's say that today the bank has reduced the money because the bill has been dishonored. But I wouldn't know about it unless I update my passbook with the bank. So as of today, the bank has reduced the money from my bank account, which even passbook will show a lower value. But my books of accounts will not show the reduction. If I would not have recorded this journal entry yet, because I wouldn't know about this yet. So my cash balance will have will be higher than the passbook value. So this is a case where I will have to go ahead and less or rather subtract value from my bank account. What will I be doing here? Bills dishonored, debited by bank account. So what am I saying here? I give the bank a bill. The bank was supposed to get value for the bill, but the bill was dishonored by Mr. A, which means that the bank will reduce the value from my bank account. But I did not come to know of it as of today. So my passbook is showing an extra value of 8,000. I'm just giving a random example. Okay. So let's see what has happened here. We've provided a basic bank reconciliation statement. Okay. Okay. So what has happened here? Give a nicer format to this. Okay. So I had my cash book is showing 1 lakh value. Then I look at my passbook, but it's only showing 75,000. I'm wondering why is there a difference? So there are a bunch of reasons, and let's explore them one by one. So what has happened? My passbook has interest credited to it, but I did not know that as of 31st March. Maybe 31st March was a Sunday and the bank was a holiday. I could not update my transaction, right? Which means on 1st April or 2nd April, I went to the bank, I updated my passbook, and I got to know that interest had been credited. But my books aren't showing that. So my cash book is lesser than my passbook. So I'm in order to reconcile, explain the difference, I have to say my cash book is lower. I'm going to increase it by the value. Next, I had given a check that is before 31st March, but the check has not been presented to my banker yet. So what does that mean? I have given a check, which means in my books I would have reduced my bank balance and increased whatever account. If it's an expense, I would have debited an expense account. If it's a payment, I would have debited a liability account. But at the end of the day, I would have reduced my bank balance in my books. So my book value is lower, right? But my passbook would not have reduced its value, it's higher. So I have to add some money to my bank balance as per book in order to reconcile that. So this is stuff I add. What about stuff that I subtract? Let's say I have deposited money in the bank, right? I've deposited a check. If I were to deposit cash, this wouldn't be a case. But if I given a check, as I told you, there's a huge process that takes place in the background. But the bank checks whether the check is valid. And for that to take place, it might take a day or two, right? In that time space, in that window, I would have increased my bank balance in my books, but the passbook would not reflect the transaction data. So my books will show a higher value than my bank passbook. So I will reduce that in order to explain that difference. Right? My books is actually showing the higher value because I have recorded that I deposited a check, but the bank hasn't, confirmed that yet. So that's the reason. Similarly, let's say the bank is reducing charges, it's taking charges, reducing my balance, but I don't know about it yet because I've not updated my passbook. So book, my books of accounts show a higher balance. So I have to reduce that amount in order to compare it with my passbook. Similar, bills dishonored. So my bank would have approached, the person who gave me the bill, but they would have basically disowned the bill. So the balance from my account would have been reduced in order to make book. So the bill value would be reduced from my account, right? Which means I would not know about it yet. So my bank balance as per my cash book is still higher, right? But the passbook is lower. So I'll have to reduce it in order to explain. So what do I do? My 1 lakh, I'm going ahead and I'm adding this 3,000 and I'm subtracting 28,000. So the adjusted cash book balance is 75,000. And it matches my passbook. So I've explained the reason why there's a difference between my cash book and my bank book. Okay. So now, any doubts as of now? Okay, I believe you're talking about the bills dishonor. Okay, so I'll take it step by step. So what happens first? I'll actually just go right to the top, so becomes a little more easier. What happens? So there are. Oh, let's start with what a bill is. So you know what a check is, right? So let's say I'm Mr. A, or rather, let's say that You know what a bill is, but it's easier for me to go from the start rather than like have a confusion in the middle. So let's see. A bill is basically a promise, a piece of paper that promises to pay some amount to a person. So I took a scenario where there are two people, Mr. A and B. A has to pay Mr. B money. So instead of giving him the cash, he gives him a bill. He presents a bill, right? Or rather, here the word I have to use is gives, because presenting means that I'm asking for the money from somebody. So let's say he gives a bill, right? Which means that Mr. A, has a bill payable and Mr. B has a bill receivable. So the bill has a maturity date. So on 15th May, Mr. B can give the bill to Mr. A, and Mr. A will have to pay Mr. B the 1,000 rupees which he owes. Now, what Mr. B does is, let's say on today is, let's say 10th May. Okay, I'm just giving an example. On 10 May 2020, he goes ahead and says, I need money on 10th May. So I'm going to ask the bank to give me 90% of this value. Right? So the bank will take the bill from him and it will basically give him the amount at a discount. So how did we go ahead and account this? We accounted this as a loss, the 100 rupees. So now the bank has the bill and we have the 900 rupees. So we can spend it or do whatever we want. On 15th May, the date of the due date, right? Mr. A will be presented the bill by the bank, right? So the bank will go and give the bill to Mr. A, and Mr. A should ideally pay. But Mr. A, in this case, let's say he dishonors it. He says, I will not pay the money to you. So what happened? The bank was initially promised by Mr. B that it will receive the money from Mr. A, right? That's why the bank gave Mr. B the money. So now what it does is the bank will reduce the money from our account. That is Mr. B's account, right? And it will give the bill back to Mr. B. Do whatever you want. I'm taking the money back from you. You decide how. So it will tell Mr. B to mind its business with Mr. A, however it wants. So what happens? Our bank balance will reduce, and we will in turn have a debtor. So let's say today is 31st March. So we have understood the concept of what a bill is, what discounting a bill is, and what dishonoring a bill is. Okay, what happens when a bill is dishonored? A bill that is discounted with the bank is dishonored. Okay, so in our case, let's say that on 31st March, a bill is dishonored by a debtor. But I have not updated my passbook yet. So in my cash book, in my books of accounts, I will not record this transaction because I do not know of it yet. My bank has not informed me yet. So I don't know about it. But however, the bank will reduce the money from my passbook, from my bank. So to explain that difference, where the bank has reduced the money, but I have not accounted it yet in my cash book, we are reducing the value from our cash book. That's the idea behind this. Fine? It's actually not an option. It's actually wrong, right? But it does happen in business, right? Say your friend is telling you that he'll pay you 20 rupees tomorrow. He may not always do that. He'll say, bro, I forgot. So it's not right, but it does happen in business. You see people not paying the loan installments. And we are just talking about what happens if he does it. So if you're asking legally whether he has an option of not paying, no, it is illegal, right? Because he agreed to pay that amount. That's why he gave a bill. But it just so happened he may not have had money on that day. He may have said he has to pay. So what are we doing? At the end of the day, we are going ahead and debiting him as a debtor. So we do have the right to receive the money from him, which we are accounting as an asset in our books. So tomorrow we might receive cash from him. So we will go ahead and debit cash account once we receive the cash, and we will reduce Mr. A, that is the asset account. So we'll reduce the value of the asset from that account and increase our cash balance. That will eventually happen. But that is the next part of business. Whether he pays us, whether it's a bad debt, whether we go to a court, that's a totally different idea. But the idea as of now is what happens when a discounted bill is dishonored by the promisor. That's all we're talking about. Okay, so let's get started with this illustration. So let's go through it once and see whether anything is out of the ordinary. So what happens? So we are trying to compare the cash book of Mr. Tulsian with the bank passbook. There are the following discrepancies. So out of 20,500 paid in cash and by checks into the bank on 27th March. So what is this? We are doing this on 31st March, if you notice this, right? 31st March is the date. And we are also given the balance as per cash book is 39,570. So guys, don't get confused when they say that balance as per cash book is something. It doesn't mean the cash balance. They can also use, so basically it represents the bank account in our books of accounts. Don't think that because the word cash is there, it means that it means the cash balance. The moment we talk about a bank reconciliation statement, we are completely talking about explaining the differences between bank balances from our books and the bank's profit. Okay. So we know what the balance as per our books were, 39,570. So what has happened on 27th March? We have deposited 20,500 into our bank. So we deposited both cash and checks. Out of that, checks amounting to 7,500 were collected on 7th April. What does this mean? As of 31st March, we have deposited the money to the bank, but the bank has not confirmed the deposit yet. So let's say that this terminology basically means that it represents what happened back in the olden days. There was not much technology. So what used to happen was there used to be banks, right? So every day they will go ahead and like prepare, get all the checks they've received onto a huge table, and there'll be people who basically divide the checks into different banks. So let's say there are 5,000 checks that have been deposited on that date, right? They will split all the checks and categorize them into different checks from different banks. So and then that day there'll be a person who's allotted that you go to this bank, you go to this bank, and basically each person allotted will take all the checks that have been deposited from one bank. They'll go to the other bank physically. They will hand over the checks to that bank manager or whoever. That bank manager will go through each and every check, and he will give a clearance and pass on that money to this bank. So it used to be physical, as in you had to physically go, and the bank had to go and physically give the check to each and every bank. So that's what we mean by the word collected. Okay. So what we understand is we deposited money on 27th March, but that was only collected on 7th April. So as of 31st, our bank has not received the money. The money has not been deposited into our bank. We, however, would have increased the value of our bank balance in our books. So that's A, familiar. B, check and cash amounting to 4,800 were deposited in the bank on 26th March, but credit was given for 3,800 only. So let's see what this means. Just a moment. Okay. Let's try to understand this. We deposited value worth 4,800, right? But the bank has only credited 3,800. Let's not go into why as of now. Maybe it was an error on the bank side. Maybe one of the checks were faulty. But as of now, we know that as of 31st March, our book balance would have been increased by that 4,800 because we have deposited. But the passbook will only show the increase of 3,800. So that's a difference of 1,000, by which our cash book is higher than the passbook. Out of checks amounting to 7,800 drawn on 26th March, a check for 2,500 was encashed on 3rd April. So what is this? We have drawn a check. The word drawn, right, means that we have issued a check. We have issued a check to, say, a vendor or somebody we have to pay. So the word drawn, a check is drawn on 26th March for rupees, blah, blah, blah. It means that I'm issuing a check. Okay. So it means that I'm going to go ahead and basically reduce my passbook value because let's put it this way. I would have reduced my cash book value because I've given a check worth 7,000 of many checks worth 7,800. But the bank could have reduced only to the extent of 7,800 minus 2,500. If I do the math properly, it's around 5,300. Yeah, somewhat around it. Yeah, 5,300. The balance 2,500, the bank could not have paid anybody because nobody has asked for it yet. Okay, so that's something we understand. Checks issued to creditor amounting to 20,000, 25th March, of which checks worth 3,000 were presented up to 31st March, which means 17,000 rupees worth of checks. That's 20,000 minus 3,000. They were not yet presented. So we would have reduced the bank balance in our books. But the bank would not have paid that money to somebody because they haven't asked for it yet. Okay. So a check for, so we understood that check for 1,000 entered in cash book, but omitted to be banked on 31st March. So what does it mean? So basically, we have received all these checks today. Okay, let's say today is 31st March, and we have like bundled all of it into a nice envelope, and they're giving it to the office peon, and we are increasing our balance in our books, and the office peon deposits. So then we look into our drawer and see we have forgotten to give one check to the peon to deposit. So check. So, but we would have thought that we have given it to the peon, which means we thought we have deposited the money and increased our bank balance in our books. But it was omitted to be banked. We have not deposited it yet. So that's the reason for the difference. So check for 600 deposited into bank, but omitted to be recorded in cash book and was collected by the bank on 30th March. So what happens? I've deposited a check in this case, right? Which means my bank, it's as of 31st March, my bank balance would have increased, but I have not recorded it in my cash book yet. So my cash book will have lesser value. So bills receivable for 520 previously discounted. Discount rupees 20, right? With the bank had been dishonored, but advice was received on 1st April. This is what I was talking about. So bills receivable for 520 previously discounted, right? Which means that the bills receivable is having a value of 520. The bank would have given me 500, right? Because the discount is 20. But now it was dishonored before 31st March or on 31st March. But I have received that information, the advice from the bank on 1st April. So my balance would have reduced as of 31st March. But the information would only reach me on 1st April. So my books would still show a higher value than a bank. So bill for 10,000 was retired paid by the bank under a rebate of 150. But the full amount of the bill was credited in the bank column of the cash flow. So what does this mean? I have a bill for 10,000, right? I'm receiving only 9,850 from the bank, right? They're taking a discount of 150. But I acted as if I received the entire 10,000 from the bank and debited my bank book with 10,000. So don't get confused with this credited and debited. It basically means that I received the money, okay? So I have increased my balance in my books by 150 rupees. I only received 9,850, but I increased it by 10,000. That's 150 extra. We'll have to adjust that. So a check of 1,080 credited in passbook on March 23rd being dishonored is debited again in the books on 1st April. No entry in the cash book about the dishonor of the check until 15th April. So this is a bit interesting. We'll go into this once we start doing this. Okay, this might be interesting. Check of 200 drawn on a savings deposit shown as drawn on current account in cash book. So what does this mean? Basically, I gave a check from my bank account with Citibank, but I recorded it as a check given from my SBI account. So basically, I mentioned the wrong account in the journal entry. So let's try to prepare a nice BRS. Okay, so BRS, let's take the format from here. Nicely done format. So let's use this. Okay, so what do we have? So in this case, we have to actually arrive. So we can't really find out if there's a difference. Okay, we just know whether that's a right answer or a wrong answer. We can't figure that out. We just have to do it right. So let's say this is arrive balance as per passport. Right. So what is this? We basically have to go ahead and all these will be pasted. Let's do the math at the end of it. Okay. So let's try to figure out all of these entries one by one. Number one, we know that the balance as per cash book is 39,750, right? We have counted that. Next, number one, 20,500 deposited into the bank account, right? The check amounting to 7,500 were collected on 7th April. So let's look at it this way. So I deposited checks, which means my bank balance as per my books would have increased. However, 7,500 worth of checks have not been credited in my bank account, my passbook, which means the passbook is lower by 7,500. So always imagine it as if you are the accountant, right? So you're looking at your cash book, you have deposited a check and you have increased the 7,500. However, your passbook won't reflect it because the bank has not confirmed it yet. So my cash book is showing a higher value than my passbook. What will I have to do? I will have to reduce my cash book because I'm starting with my cash book. All the changes I make should be from the point of view of my cash book. I'm making changes to my cash book in order to arrive at the balance as my passbook. So in this case, my cash book is higher, right? Because I've deposited the check, but the bank has not confirmed it. So I'm reducing the value. Checks deposited but not cleared, 7,500. Okay, minus. Next, check and cash amounting to 4,800 were deposited, but credit was only given for 3,800. So my cash book would show a higher value of 4,800. Correspondingly, the bank has only increased by 3,800. What's the difference? 1,000 rupees worth of money has not been recognized by the bank. So let's not go into why, but as of now, we know that my cash book is higher by 1,000 rupees. My bank has not recognized that extra 1,000. So my cash book will have to reduce to explain the expense, right? Explain the difference. So let's call it checks deposited but not clear. Let's call it number 2, right? And that's 1,000, right? Next, checks amounting to 7,800 drawn. Again, if you recollect, drawn means that I am giving money, right? Out of 7,800, 2,500 was encashed on 3rd April. So this is after 31st March. So as on 31st March, I have reduced my books by 7,800 because my cash balance would have reduced. But the bank has not paid out 2,500 yet. So to that extent, my passbook will be higher, right? I'm accounted as if I paid the money. My balance is reduced. But the bank has not paid the money yet because it has not been asked for until 3rd April. So as of 31st March, my passbook value is higher. So if my cash book value is lower, to show the proper change, I have to increase my cash book value to match with my passbook. So that's 2,500 I have to increase, right? Checks issued but not presented. So that's 2,500, right? That's number C. Checks issued to creditor amounting to 20,000 on 25th March, of which checks worth 3,000 were presented to the bank up to 31st March. So until 31st March, only 3,000 was recognized and paid by the bank. So the balance 17,000 worth of checks that I have given, which means I would have reduced the value in my books, but they have not been encashed yet as of 31st March, which means the bank has not paid the money. So the bank still has money, but my books would have reduced in value. So my cash book is lower than my bank, which means I have to increase my cash book to match with my bank. Right? So I'm increasing. And this is the same case as before. Checks issued but not presented. So let's call it case number, let's call it D so that it matches with the question. D. And that's 17,000. And don't get confused with the English. They're saying that 3,000 were presented up to 31st March, which means that the balance 17,000 weren't. So don't get confused. Only three. The moment you look at numbers, you might get confused. You just write 3,000. That happens sometimes. Thoroughly read the English so that you understand exactly what happened. Okay. So let's go on to transaction number E. A check for 1,000 entered in cash book, but omitted to be banked on 31st March. So the moment that I have entered something in my cash book, my balance is increased, right? So my cash book has increased by 1,000, but my bank has not increased, which means bank is lower, right? So I will have to reduce my cash book to match with my bank. So the moment I have to reduce something, which means check accounted in book, but not deposit. And I'm reducing the value by 1,000, right? Okay. You can call it not yet banked if you want the exact term as per the question. So that's number E. I'll actually go ahead and call it. A check for 600 deposited into the bank, but omitted to be recorded in the cash book and was collected by the bank on 30th March. So what does this piece of information tell us? It tells us the bank has increased in value even before 31st March. So as of 31st March, the bank balance is higher by 600, but I have not recorded the deposit in my cash book. So my cash book is lower. To match with the bank, I have to increase the value of my cash book. So I'm adding, right? So this is transaction number F or letter F. So check So there's no stringent text that is to be applied here. You just have to communicate what the transaction effectively. Okay, deposited in bank, but not accounted in books. So that's 600. Okay, let's go on to the next one. G. A bill receivable for rupees 520, previously discounted, which means that I have received 500 from the bank earlier, but the bank has been dishonored, right? The bill has been dishonored, and the advice was received on 1st April. So if you understand what has happened, as of 31st March, the bank could have reduced the entire value of the bill from my bank account. Do not think the bank could be reduced 500. The bank gave me 500 because it gave me the money before the due date, right? It's consideration. The 20 rupees that it took was for its benefit, for giving me money earlier, right? But because the bank has been dishonored, right? Because the bill has been dishonored, the entire value of the bill that was promised to the bank has to be deducted from my account, which means the bank is reduced not 500, 520, the entire value of the bill from my account. So as of 31st March, my bank balance as per passbook will be lower by 520. So for my cash book to match, my cash book will have to reduce the value, right? So that because my cash book would not have recorded the transaction yet. So my cash will still be higher. My bank balance as per cash, as per my books of account should still be higher. So to match it with the bank account, as per the bank passbook, I will have to reduce the value from my books of accounts. The value of that transaction is 520. Right? So next is that's number G, right? H. A bill for 10,000, retired and paid by the bank under the rebate of 150. But full amount of the bill was credited in the bank column of the cash flow. So I received only 10,000 minus 150, 9,850, but I accounted it as if I received the entire 150, which means that my books are higher by 150. My bank balance would have increased only by 9850, but my books have increased by 10,000. So to match it, I have to reduce my books by the difference, 150. Right? So let's call this transaction number H, right? So bill discounted, incorrectly accounted in books of accounts. And that would reduce it by 150. Right? So next is I. A check of 1080 credited in the passbook, okay, which means that I have deposited some money, right? And I've received the money in my bank. But it's dishonored is debited again in the passbook on 1st April. There was no entry in the cash book about the dishonor of the check until 15th April, which means as of 31st March, the bill, or rather in this case, a check. So you can ask, how can a check be dishonored? That's pretty much the same idea, right? If somebody is giving me a check, say that let's put it this way, I give you a check for 1,000 rupees, but my bank only has 100 rupees balance, okay? But I'm acting as if I'm a huge rich guy and I'm giving a check for 1,000 rupees. My bank will obviously reject the check because I hardly have 100 rupees in my bank balance, right? So how can I give money of a check of 1,000 rupees? So the check will be rejected. It's called a check bouncing, if you heard of the term. So in this case, I have received a check for 1,080. I have deposited it, and my bank in this case has increased the amount. In this case, we don't know why, but the bank has actually credited the amount in my bank. The bank balance has increased. But they knew that the check is not worth 10 rupees even, and they have reduced the value accordingly on 1st April. So as of 31st March, my books will be increased by 1,080, right? But as of 31st March, it has okay. Here's actually something interesting, right? I'll put it this way: I have deposited a check, right? When I have deposited the check, it's well before 31st March, and the bank has increased the value, or rather, it has accepted the check, and the bank balance is also increased. So as of 31st March, the value in my bank of 1,080 and the value in my books of 1,080 is perfectly matching. The dishonor is debited in the passbook only on 1st April, right? That is after 31st March. So until 31st March, both the passbook and the cash book were matching because whatever happened, the dishonor, it was debited in the passbook only on 1st April. Right? So as of 31st March, the entire transaction was accounted in both the cash book and the passbook, which means transaction number I will have no effect in my bank reconciliation statement. Let me explain that again. So I deposited a check and the check was cleared by my bank. Both of these happened before 31st March. It happened on March 28th, right? So as of 31st March, both my books have increased and my bank balance, my passbook has increased by 1,080. On 1st April, my bank balance as per passbook is reduced because they came to know that check is not worth 10 rupees. And I came to know of this on 15th April and I reduced my bank balance as per my cash book, as per my books of accounts. However, none of this happened before 31st March or on 31st March. On 31st March, none of this happened. All of my balances matched. This transaction will not come or will not take part in our bank reconciliation statement. So we ignore this completely. This is given to confuse us. Let's take transaction number J, or rather transaction letter J. A check of 200 drawn on his savings deposit account, which means he has given a check, right? So, or rather, the Mr. Tulsian has given a check of 200, but it is accounted as if the check is given from his current account, right? So what happens in this case, right? My value, rather, my savings bank account is not supposed to, it is supposed to reduce in my books, right? Because I've given a check from my savings bank. However, my current account is reduced. That's a mistake, which means my bank balance in this case will be higher, right? My bank, or rather in this case, what happens is my bank balance will be lower by 200. My savings account in my books will show a higher balance of 200 because I have recorded it in my current account. I will have to correct it in my books later, but as of 31st March, my savings account in my books will show a higher value than the balance as per the passbook. The passbook, the value would have reduced, right? However, my books, I have recorded it improperly. So, for my cash book to correctly match with my passbook, I'll have to go ahead and reduce the value in my cash book by the 200. That is transaction number J. I explain this again because I have incorrectly accounted check drawn on savings account to current account. So my current account balance is reduced in my books. However, the savings account balance, which was supposed to reduce, did not reduce. To compare it now, we are reducing it by a value of 200. So I believe that's all there is. So let's try to fix all of this up. So what happens? I'm supposed to add all these numbers, right? And I'm supposed to subtract all of these numbers. What happens? So my balance the cash book, I add 2100 and I subtract 10,370. So the balance as per passbook is 49,480, except a small piece of information that we may have missed. Just a moment. Oh, okay. Silly mistake here. The balance is 39,570. I've mentioned it as 39,750. So the balance is 49,300. So what have we learned? We've learned about how to account for these basic ideas, right? Just a moment. Okay. Okay. So this is basically fine. A couple of things that are not really too complicated enough for me to explain, right? Or rather, too complicated to explain, right? Okay. I think we are simple enough. We've covered this as a simple enough basis. Okay. So with this, we've covered maybe a basic idea with regard to bank reconciliation statements. So in actual class, right, in school or the actual syllabus, you will actually go ahead and cover what happens. You'll have to go from cash book to bank book, right? That is what we have done today. from bank book to cash book. As in they'll give you the bank balance and you have to go back to cash balance, which means you have to do everything in the opposite way. Let's say that you have a bank account, or rather the bank balance, as an overdraft balance. As in, if you remember what an overdraft is, you can draw more than you have, which means you will have a liability, a negative balance in your bank, right? So you will have to reconcile those two, right? Which means they will give you a negative balance, which means the entire way you do is different. Everything you do will be on the opposite side. So that should be overdraft as well, and it can be the other way around. There will be multiple ideas where we have only covered this and we have covered the basics. Okay. So with this, I'm closing the basic idea about PRH. So any doubts as of now? Any item you'd like me to explain again? Okay, great. So I think with that we can actually close for today. So I'm actually having a bit of trouble deciding whether we need a class on Monday because I don't really have anything new to teach. I just probably can maybe go over what we've already gone through. That's really worthwhile when there's something, some kind of value addition I can give. So